Welcome to the Kinvestor Report, where we sit down with industry experts to discuss the latest developments in the Canadian small cap sector. I'm your host, Arlen Hansen. As always, please be aware of our standard disclaimer that no part of this interview should be taken as investment advice. And as I don't know what stocks we're talking about today, Kin may own shares or be compensated by the companies that we discuss in today's interview. Be sure to join our network, subscribe to our channel, comment on the videos below, and share them with like-minded investors. Today, I'm honored to be joined by Lobo Tiggre. Today, he's an accomplished author and the founder, CEO, and principal analyst and editor of the Independent Speculator, his flagship monthly publication that delivers actionable ideas, information, and analysis via disclosure and discussion of actual investments, and the Speculator's Digest, a free educational service for investors who want to learn the art and discipline of successful speculation, mostly in mining. A great resource for all you newbies out there, for sure. Lobo, thank you so much for joining us today. How you doing?
Just peachy. It's a sunny afternoon in Warsaw, Poland, and I'm enjoying the free market vibe I get from this city. It's a pretty vibrant place.
I've been interviewing lots of people overseas lately, and they all seem to be smiling. It's
Well,
it's wonderful. Maybe I got
the
to
world's
move.
in a global recession, if you ask me. So I'm not sure everybody's smiling, but
Yeah,
life
yeah,
goes on.
yeah. So lots to talk about today, mostly about commodities, of course, right? This is your stick, this is my stick. But I think some of the big news is like this U.S. labor market is starting to crack, right? What are some of the implications in regards to the commodities market and where to start placing our bets on?
And I think that's huge. Great place to start. Gold bugs in particular, we want to see a recession around every corner, so it doesn't take much to convince people. The issue is that we've had, I think the US has actually been in a recession, not just the 2 quarters of negative GDP, those are government numbers, but the so-called rolling recession, right? We had an earnings recession, a freight recession, we had a commodities recession, like we had all these
Yeah,
negative things,
yeah.
except for this supposedly strong labor market. And of course, the labor is the consumer. So I've likened it to the whole US economy perched on a one-legged stool. And the one-legged stool is this laborer slash consumer. So if that's starting to go, if that's cracking, that is a big deal. And we'll see. We've got more than one data point. The market's really moved on the jobs claims, the weekly jobs claims number last week. And that's unusual. I mean, it's something that they look at, but it's just a weekly number. It's not like the big monthly jobs report from the US government, but it came on the heels of that big monthly report, which was a huge miss. And then the JOLTS numbers were a miss. And you look at the overall picture here, and basically all the metrics are starting to flash either red or pink, if you will. They're headed in that direction.
Mm-hmm.
And if that is the one-legged stool holding up the economy, obviously implications are big. And there's a lot of different ways we can go from this, but just real quick, the one thing to be very careful of is don't assume that just because something bad happens, that it's necessarily going to be a stock market crash in 1929 all over again, or even 2008 all over again. What happens when we see bad news? The Fed has trained investors to see that as good news.
Yeah.
People, markets are forward looking, so they see, oh, great, bad news. The Fed's going to bail us out.
Yeah.
So be careful, dear audience. We could be right about the recession, but if you're assuming that means a market crash, you could be wrong about that. So you need to be careful how we play it.
Yeah, that's an interesting take. So what are the implications for gold in this manner? Right. Like I kind of thought what you said was interesting that weekly jobs came out. We saw a kind of a big move in gold, surprisingly, because it's just another weekly number, right? So where's all this love coming from gold right now, do you think?
Well, on that particular day, the bad news is good news. It's weird to see gold moving with the S&P or even the Nasdaq on some days because gold's not a risk asset. It's a safe haven, or at least it's supposed to be. But we live in a central bank distorted economy, and the Fed pivot or the Fed intervention in the marketplace, however you want to look at it. The idea is any bad news means the Fed's going to cut rates, and cutting rates is supposed to be good for risk assets. They like low interest rate environments, but also it's not that gold is a risk asset, but gold doesn't pay interest. It's that old trope about gold, being, a pet rock. All it does is gather dust. It doesn't pay interest as an investment. So if rates go down, then there's less competition between the other supposed safe haven government bonds and gold. So that's supposed to be good for gold. And you see that What's really interesting to me about this, though, is that these moves on what the Fed is going to do, higher for longer, all this sort of stuff that have been so powerful in the marketplace for the last few years are starting to give way. There's a new buyer out there that seems to not care what the Fed is going to do. We'll see massive buying at times where the Fed's either done nothing, or when there's some data that suggests higher for longer, which would be anti-gold in this Fed distorted context. So that's really interesting to me. But you asked about the implications of, if I'm right about this one-legged stool finally giving way, the implications are a recession. Recessions are good for gold. The implications are the Fed comes to the rescue, easy money. Also, don't forget fiscal policy. If there's a recession, that's no fault of the people's own, which has
Yeah.
now been
Yeah.
established as a sufficient cause to send people, not just a token amount, but thousands and thousands of dollars in stimmy checks. So the easy money floodgates open. An important thing to remember about gold is it tends to lead inflation. People want to correlate gold and CPI, which is a crappy measure of inflation anyway. Can I use that technical term? No, that's a
Yeah.
technical economic term. It's a
Yeah.
crappy measure of inflation anyway.
Works for me.
All right, but since gold leads, and we just had a perfect example of this, 2020 happens, lockdowns, stimmy checks up the wazoo. Anybody with half a brain could see it coming, and gold went up, right? Safe haven demand, inflation's coming, and then what happens? So gold goes way up in 2020 and then goes sideways. And in 2022, we start seeing the inflation really head up to 9%. It takes a while to get going, but it does. Long and variable lags, things happen. And gold does nothing. It goes sideways.
Yeah.
And people say, see, gold's not an inflation hedge. But it is. It led. It told you the inflation was coming. So the point now is, we could actually see gold signaling this is happening now. It is signaling that forward-looking markets see the recession coming, see the easy money, both from the Fed and from Congress, and gold is leading the next round of inflation.
Mm-hmm.
And that could be why we're seeing, record nominal, at least all-time high after all-time high this year, the hockey stick that we're seeing. Both of these things, I think, are very bullish for gold. But that aside, we have the issue that I was starting to touch on, that I think there's a new whale in the market. And that whale is very price insensitive. Doesn't care what the Fed is doing. This whale is buying physical, doesn't want no ETFs, doesn't want no stinking gold stocks, no risk, no third party, nothing. I want my bullion in my hot little hand, right? It's just incredible to see, record gold prices nominally,
Yeah.
outflows from the gold ETFs at the same time.
Yeah. And I've seen that
Right?
chart. It's totally
Yeah.
bizarre. Hey?
But the explanation is there's somebody with really deep pockets. This isn't just you and me going down to the local coin shop to buy a few more, right? This is really deep pockets that wants physical. This is safe haven demand.
Yeah.
So I think that's very interesting. A lot of people are saying it's the Chinese, and there is data out of China that says that's part of it. But I think it's bigger than that. I think it's global. I think it's a global reallocation. I can't prove this. This is just my take. I think we're starting to see a global reallocation. I don't know if you've interviewed Rick Rule or not, but if you've
Coming
seen
up. It's coming up.
good. All right. So
Yeah.
one of his favorite things that is if you look at the 4-decade mean of portfolio allocation to gold globally, it's around 2%. And that recently the allocation to gold has been about 0.5%.
Is that to
So
retail or like central banks or institutional ownership?
it is global portfolio allocation. So
Covers the
so
spectrum of
that
it all.
would that would be institutions, it would be retail. But I actually don't think it covers sovereigns.
Okay.
What a central bank does is somewhat different. Maybe a wealth fund is an institution. I'm not actually quite sure on what the definition is there. We'll have to ask Rick. Ask him when you interview him. What
I
is the
sure will.
definition of that?
I'm writing that down. Okay, Rick, get ready.
Right. But assuming Rick's got the good numbers here, forget gold bug dreams of everybody, stocking gold bricks and they're up to the rafters, right? Just a modest reallocation back to the global average implies a 4x increase in investment demand.
Wow.
And, let's take a more conservative view. Conservative. Let's imagine that there was no Bitcoin last time, and Bitcoin has changed the scenario, and some people are going to allocate to Bitcoin, gold 2.0. Okay, let's say it doesn't go back to 2%. It only goes back to 1%. That's still a doubling of investment demand. And you know what? I just can't imagine a world in which everybody chooses all Bitcoin, no gold. Well, A, that's not happening now. Obviously, we can see it in the data. Gold goes up to 2,400. It's not because everybody's given up on gold.
Hmm.
So that's just not true. But I'm just adopting it as a contrary case. Like, let's say Bitcoin is eating gold's lunch, at least partially. A global reallocation to hardening your portfolios with a bit of safe haven insurance is immensely good for gold. And it has nothing to do with interest rates or stimmy checks or nothing directly, right? So it's kind of exciting.
Hmm.
I've been very bullish on gold this year, but it has gone up sooner and faster without any of the things that I thought would make it
Yeah.
go, like the recession and the money helicopters flying again. So interesting times.
Yeah, well, I find it's interesting. All the gold bugs are screaming, gold's going higher, and then boom, it happened, and it happened very fast, right? And I think it did catch people off a little by surprise, even when they were calling for higher gold, right? It's just been super interesting times. Let's move on to silver a little bit here because silver seems to be acting a little differently in recent years. Do you look at silver as the exact same investment thesis as gold?
Many moons ago, when I was a younger wolf, I did. I mean, they're fungible. They're both monetary metals. I don't get excited about the gold silver ratio. The big difference in my view is that silver is bulkier, right? You can fit $1 million of gold in a briefcase. You need a truck to carry that much silver.
Hmm.
So gold is more convenient. But other than that, they're basically the same thing. They'll fulfill the same role. But in recent years, as you pointed out, we've been seeing when people get mad at me, people call me names, Darth Silver, all that stuff,
I
right?
like it.
But it's just a fact. Just look at the data, right? There's, all these people complaining about the widening gold silver ratio. Well, that's the data, right? You can
Yeah,
say it's
it is what it
manipulated,
is.
it shouldn't be happening, but right, it is what it is, as the modern parlance goes. And there are reasons for it other than manipulation, right? Silver's industrial side is clearly powerful and getting stronger. And you can hate that if you want to, but it's not all bad. The fact that we need more silver than ever for all these solar panels, the green agenda is just going nuts. You'd think that a war in Europe might be a reason to maybe pause the green agenda and say, hey, you know what, we believe in saving the planet, but we're in a war here, so let's be a little bit more rational about our energy sources. Nope, we're going to double down on the green agenda. And
Yeah, good point.
COVID, right? We've got this global pandemic. We're locked down in our houses. You'd think that might be a reason to say, okay, time out. We still want to save the planet, but this year there's an emergency
Yeah,
here,
yeah, yeah,
global
yeah.
emergency. Nope, they double down on that too. So, this is very bullish for everything that's consumed here. But silver and copper are two pretty unique. Like even the lithium can be replaced, let alone the cobalt and other things in there. But you're going to need silver for those solar panels, and you're going to need copper for those wires, no matter how this plays out. And the powers that be have made it crystal clear that there is no global catastrophe that won't make them just double down again on this agenda.
Yeah.
So very bullish. The big question is, okay, fine, that's the big picture over decades ahead. What about right now? And what's been interesting is that in recent years, we've been seeing silver correlate more closely with copper than gold on a frequent
Interesting.
basis, which is, kind of scary if you want silver to track gold. And that's been a reason why I've been quite a bit more cautious and get called all these names and things. And not only there's that relationship, also, any silver bull will tell you that silver typically lags gold in a breakout and then more than catches up in the end. I'm sure you've
Yep.
heard that many times, if not said it yourself, right? Well, that's been true in every single bull case except the last one.
Yeah.
In 2020, silver never caught up, right? We're looking at nominal record gold price after gold price this year. Silver is still working to get above halfway to its previous all-time highs. So the data is telling us that the silver market has changed, the use case has changed. Ignore that at your own peril. Now, this again doesn't make me anti-silver. I mean, for there to be a whole new source of much larger demand than there was, say, in the 70s, going up to the 80 peak, I think that's great. That doesn't subtract from the monetary case or the silver is money case. Doesn't change that at all, really. It just adds a potential tailwind. And if anything, there's a contra Lobo scenario here where if Team No Landing is right and safe haven demand goes away, gold may not fulfill my
Perform.
expectations this
Yeah.
year.
Yeah.
But that scenario would be extremely bullish for silver because it'll be off to the races on this agenda, right? And they need silver for it.
Yeah. I do find it interesting how
Go
silver
ahead.
has decoupled from the gold's story over the last few years.
It has, but it's come back recently. I
Yeah.
got distracted, but ever since, I don't want to say it's a good thing. There's nothing good about Hamas and Israel and the tragedy
No.
over there.
No.
But since that event took place, it's about that time silver started tracking gold more closely again. And on that day, the gold and silver both reacted very similarly. And since then, really, a lot of that difference that I was seeing in recent years with silver looking more like copper than gold has just gone away.
Hmm.
And that hasn't really closed the gold silver ratio yet, but it's important to see silver rising on days where gold is responding to financial or geopolitical headlines and copper is tanking or oil is tanking. If part of your thesis is that the world has printed too much money and all these reasons for monetary metals to go up, if that's part of your investment thesis in silver, it's good to see silver hooking back up again with gold. So I'm very encouraged. And actually, if you had had this interview with me 6 or 7 months ago, I would have said, I'm looking for gold stocks in 2024, no silver stocks until I'm sure the recession has done its worst, or we see how silver will respond to the recession. But we're seeing it now. Since last fall, since the new war in the Middle East, silver is acting like a monetary metal. So I've changed my marching orders. My shopping list includes silver stocks now as well as gold stocks.
Yeah. Okay. So we're gonna move on to uranium because this could be all I hear is bullishness, right? And I know that you were very bullish over the last couple of years. You've been calling that to a T. Where are we now? And what is the bear case for uranium now that we've doubled and a half in price? A lot of these stocks have had great moves. So where do you think we are now? And I want to hear a bear case for uranium, things for us to look out for.
Well, a bear case would be that we've already risen above the incentive price. There's not only low-hanging fruit being brought back to market, restarts, the voluntary restraint of the two largest producers, Cameco and Kazatomprom, they are actively undoing that, unwinding that now. And the low-cost projects out there, those are being built now. There are a couple projects that are approaching first production right now, and there are more just behind them ramping up in that direction. So the bear case would be high prices cure high prices. Uranium is not rare. There's tons of uranium around the world. And to add icing to the cake, there's a lot of not just funds like SPUT, the Sprott Uranium Trust, that bought uranium, and their plan is to sequester it. SPUT would have to change its corporate structure to be able to sell any of its uranium. Other ones, not so much. Other ones could sell if they wanted to. But the companies, there are several miners that bought, or explorers or developers that bought uranium when it was cheaper for the explicit purpose of selling it when it was higher to pay for building their mines.
Right.
It wasn't a buy it and hold it forever. So this is a new source of secondary supply. So you could add all these things together and say, high prices are curing high prices. There's new secondary supply. It's done. It's rolled over. The peak at 106 earlier this year, that was the top, and it's going to be, not downhill forever, but there's no upside left.
Mm-hmm.
That's important. Like if that's the worst case scenario, that there's no upside left, it almost doesn't matter for the best uranium stocks.
Yeah, no,
Because
it
if
doesn't
you're
at
if,
all.
if you're building a mine, right, you're going from spending money drilling holes in the ground, right, to making money out of a bigger hole in the ground, right? That transition is really important.
Totally.
And if you've got a good project, you're going to make a ton of money. So you don't actually need the prices to go up to make money buying the right uranium stocks. And the producers, right, they've built around, $30 uranium, or
Yep.
Kazakhstan even lower, right? These guys are going to gush cash
Gosh, yeah,
right
for
now,
sure.
right?
Yeah.
So, yeah. Okay. So actually, that's the worst market case. The real worst case is there's another Chernobyl,
Yeah. Yeah.
right? If that happens, even
Game over.
China and India probably slam the brakes on, and that would be the nuclear winter, pun intended, for uranium investors.
Yeah.
But those are very rare.
But they
And
happen.
they have, well, okay. I don't know how far down this rabbit hole you want to go. There's three major nuclear accidents that are talked about all the time. 3 Mile Island,
Yep.
really BS. Nobody got hurt. I mean, the other reactor in that same plant was only just shut down. Like, that plant was so safe and nobody was actually hurt. And they tracked this in the region after years afterwards. Like, nobody really was hurt by any radiation there. So the plant actually kept operating until recently. This is not a nuclear disaster. It was a nuclear scare. Chernobyl was the real deal.
Yep.
Though arguably, and people did die, like from the plant accident and explosion, all that stuff. But arguably, the problem there wasn't really nuclear power or engineering. The problem was Soviet stupidity, Soviet unwillingness to confront design flaws or listen to anybody saying there are design issues here, and then unwillingness to admit human error in the process, and then finally unwillingness to confront the issue when it started instead of facing it and reacting appropriately, but lying, obfuscating. Recall that this happened just before the big May Day parade, which is so important, Victory Day for the Soviets, right? You can't go on TV and admit to a national embarrassment just in front of the victory parade. I mean, you can and you should, but clearly in the Soviet mentality, you couldn't and you didn't, right?
Yeah.
So I think all of this contributed, a lot. And then Fukushima. Nobody's been killed by radiation in Fukushima. It really, I mean, the deadly incident was the tsunami. And that exposed weaknesses in the design of this nuclear power plant, which were dealt with. Like, the emergency crews responded. And yes, it was an emergency. They had to avoid a big nuclear problem there, but they did. Right. So if anything, that shows you how resilient, to use a popular word these days, nuclear energy is. If in 70 plus years, we've had one serious incident that involved bureaucratic stupidity more than engineering, in my view, that's actually a pretty damn good track record.
It's a good home run. Yeah. Yeah. No, I agree. You'd probably see a lot more lives lost in the oil field and all sorts of energy producing areas, right? Like,
or burning coal. If you look at the emphysema, whatever other statistics, the number of people that can be directly tracked to burning coal. Coal kills a lot more people than nuclear power, even with Chernobyl, right? And by the way, friendly, green, no carbon emissions hydropower. Just ask the Chinese what happens, or the Ukrainians what happens when a dam goes. If there's a city down river from a big dam, that can have the impact of a nuclear weapon, never mind a nuclear power plant. So anyway, we're in agreement here, dear audience. I think the takeaway here is actually, there's people out there who think we're all going to die if we don't stop oil now. Like, we're all going to die in 10 years if we don't stop oil now.
Yep.
And we could laugh at that or say it's silly or whatever. But the fact is, these people are out there. And by the way, they vote. And there's a lot of them. It's a popular view.
Yeah.
And they're starting to realize, holy beep, we're not going to make it without nuclear power.
Yeah, that'll be an interesting shift in mentality when that sector actually starts turning around, saying, "Hey, wait a second," right? So, okay, just going to touch base quickly on your investment thesis. When you're looking at are you taking a 1 to 2 year lookout for when you're positioning your positions? Like, I'm buying copper now because I think in a year from now copper is going to be doing really well, or like, what's your timeline when you look at these things?
I would say that my typical investment lasts around 2 years, plus or minus. My favorite type of speculation is a pre-production sweet spot play. When, like we were just talking about with uranium, when you go from pouring money into little holes in the ground to making money out of a big hole in the ground, that transition gets a re-rate in the market. It's highly robust and it's substantial. It's much more than people had understood before. I have a free report on this in my website. If you don't mind my mentioning it, just type
please
in
do.
PPSS, pre-production sweet spot, in the little search tool at the top. You get a free download. This is, I think, a spectacular investment strategy, very high success rate, substantial returns, and it takes about 2 years. But it's not that I'm looking for 2-year timeframes. The point is I'm looking for a great balance of risk and reward.
Yeah.
And on average, it seems to take about that long. If you wanted quicker rewards, then you would probably bet on pre-discovery exploration. Like if you saw this company has a really interesting thesis, like there's an old mine here and the geophysics shows a similar anomaly right here, never been drilled. We're going to drill that puppy. And if it's a lookalike to the old mine, it's off to the races. And that has a very short fuse. Like you drill that first hole, you get proof of concept. Ideally, you drill a fan of holes or a fence and you get more data than just one hole. But that can be your hockey stick in very short order.
Mhm.
The problem is that the success rate is very low.
Only God knows what's in the ground.
It's exactly like even the Rick Rolls and the Doug Caseys of the world and the Eric Sprats, nobody knows who's going to make one of these big,
Discoveries.
meaningful material discoveries. And by the way, that's why these guys, they have a very large shotgun or net or approach or whatever. That's why you see their names in so many different things because they can afford to take a chance on a lot of interesting explorers.
Mhm. Yeah, and it's those geos that can compel the money too, right?
Yes,
It seems to be
yeah,
like the same geos that are
we've got
smart,
that
but they're
track
also
record.
able to attract the right money and the right people behind them to support them. That allows them to take a lot of shots, right? Because you
Yes,
can't just drill
yeah.
one hole in a target and be like, "Hey, this is all the information I need," unless it's a complete duster, right? So,
Right. So, well, no, a complete duster could say you drilled the wrong place or something.
yeah, yeah,
But,
true.
but
Yeah,
yeah, so the ability to convince the market to come back and play with you again is an important thing for sure. But key on what I'm saying, I said, my typical investment lasts about 2 years, and to make it a shorter fuse, you need something like that. And frankly, I think the odds are too long. I have no pre-discovery exploration in my personal portfolio right now because it's just too hard. And
maybe 20, maybe
I
20
hate
years
losing money.
ago.
Yeah. But the Warren Buffett rule, right? Don't lose money. I hate losing money. So
Yeah.
sounds weird, but I'm a cautious speculator. I think of myself as a value speculator. I want a compelling value proposition. And that means there has to be something there to value.
Yeah. Right on. Lobo, thank you so much for your time.
Thank you.
I've been following you for years. You've got great analysis. You've got great theories and investment theses, and you offer a lot of value to your subscribers. So thank you so much for your time, and looking forward to seeing this all play out.
Thank you.